get into a home if you have 20% it's gonna allow you to purchase sooner. So that's one of the benefits of actually having the private mortgage insurance, is that you can actually get into the home sooner without having to.
Hi friends, welcome to My Divorce Real Estate. I'm Amber Gifford and this is my husband and teammate Scotty Gifford.
Hello, hello.
What are we talking about today?
Today I thought we'd talk about some private mortgage insurance, or PMI.
PMI, as you've probably heard if you've ever bought a home before. So what exactly is PMI?
So PMI stands for private mortgage insurance, which states, or what it does is basically ensure that the lender that is loaning you money is protected in case you default.
And so why do you have to have it?
Well, that's the main thing, is they're worried about you because you're not putting your 20% down. Then they're like, well, you might be a higher risk of defaulting. So they're going to say, well, because you're not putting 20% down, we want to have a little bit of insurance in case you don't pay, so that we're covered and brought whole again. Because, the foreclosure process might happen. And then if the foreclosure happens, then they might have all these fees and all that money they lend you, they might lose some of it. So they don't want to lose all that money.
So if you've ever bought a home before and you go to look at your closing statement, you're at the table, they're like, here's your mortgage payment, this includes your PMI. That's what they're talking about, your private mortgage insurance. So is it required on loans at 80% LTV?
No. So if you're putting the 20% down, a lot of people think you have to put 20% down, and it's not always required to put 20% down. But if you're not putting the 20% down, then you would be required to pay private mortgage insurance.
And for those that don't know what LTV stands for,
Oh, that'll be loan to value, right? So how much you're putting down to how much you're borrowing. Let's use an easy example. $100,000 home.
wish.
Yeah, we haven't seen those in quite a while. But if you're saying just keep it simple, $100,000 home, then you would, if you're not bringing at least $20,000 down, which then you would get an $80,000 loan. If you less than that, then you would require to have the PMI.
So this is standard on conventional, but what about FHA?
So FHA is pretty much, you're going to have private mortgage insurance. And you can buy a home with as little as 3.5% down. So usually conventional loans, you're at least having to bring about 5% down and then have private mortgage insurance. With the FHA, you can do as little as 3.5% down, and then that allows you. But the private mortgage insurance, it's going to be for the life of the loan, right? So it's not going to go away, and you're going to have it the whole time. Like and subscribe. Why would you want to get into a home if you have 20%? It's gonna allow you to purchase sooner. So that's one of the benefits of actually having the private mortgage insurance, is that you can actually get into the home sooner without having to save up the full 20% down. Because say if the average price of Houston now is close to $400,000, that means you're gonna have to save $100,000 to get into an average home in Houston, right? So
I think too, there's a misconception that people think conventional is better over FHA. It's really not.
well, they're both. There's not anything one or the other that's better. The one thing that I say would be better. We did conventional. We did a 5% down on our purchase price, or maybe a little bit more than 5%. Was that with the conventional, once you get down to the loan to value, it gets down to 78%. So, we only owe 78% loan to value at that point. And what we can do, so we can either pay the mortgage down, and if it gets to that point, they'll just automatically remove it.
Nice.
So then you're not paying that PMI anymore. Or you can also, like we've seen a lot of appreciation the last couple of years in 2021, 2022. We recently had our private mortgage insurance removed because we said, hey, our home's gone up in value. Let's call the mortgage company and say, hey, can you do a broker price opinion of our home and see how much it's worth?
Exactly. And then it can be removed.
And then we got removed. So we got ours removed after about 3 years of home ownership versus, average you might have to wait 7 to 8 and they just automatically get removed.
So how does this applicable for people who are divorcing, would you say?
So the main thing, that if you're buying out your spouse, you're refinancing, if you're doing the standard like cash out refi, which is what a lot of people will tell you to do, the max loan to value you're going to be able to do anyways is 80% on a cash out refi. So you're really not going to have PMI anyways. But if you're using the OLT lien, like we would talk about, and tapping up to 95% of the home's value, then you would, you might run in the situation where I actually do have PMI again. So.
All right, awesome. So, and why do you know this? We want to say that you're a licensed mortgage loan officer that specializes in divorce and the OLT liens. So that's how he knows us. We're not just pulling it out of thin air.
Yeah, and if you are looking to get a loan here in the Houston market or anywhere in Texas, we can obviously help you with that. And if you are, our company is licensed in 40 different states. So if you're watching this and you're thinking about getting a loan in some of, most of the states across the country, we can also help you with that too.
If you want to know more about PMI, you can contact us. Thanks for watching and we're here to bring you real life experiences to all your real estate needs.
Like and subscribe.
As always, we're here to bring you what?
Real life experience to all your real estate needs.